What is going on, everyone? Welcome back to another video where we're going to be breaking down our 30-minute chart, going over our daily and our weekly time frames rather quickly. I'm going to try to make this as quick as possible, possibly one of my quickest videos I've ever made, as I do have to rush to get somewhere. So today was a very tricky day to trade. As you can see, we were kind of all over the place. We end up closing out with an outside day down and a double distribution day. Kind of wacky price action, very difficult to trade. I ended up taking a few trades today. One was, or actually a few were near the highs of the day early on, and then later in the day I was shorting once we got into that upper distribution, and I'll discuss that trade here in a second. But first and foremost, I was discussing about how we could potentially get into this gap at some point in time and get this 11 wide point of control. I do still think that's going to happen. We dipped our toe into it, so we've filled that gap in just by about 4 points. Still got a ways to go before it's completely filled. So we were discussing yesterday whether which gap gets filled first, whether it's this upside gap from 70 to 91 or the downside gap from 97 to 78.50, and I felt like we had a pretty good chance to get the low here, but we did put the daily back into a balance, right, by taking out the previous day's high. We did that early on in A period. We pushed up, took out that high, got our 10 wide point of control from the earlier day in the week on Wednesday. Pushed up to the afternoon rally high and backed off, and that was a great short opportunity against that afternoon rally high. And you could have used E's high from that day, 51, as your out, right? So you could have been shorting around 49.50, using E's high as your out at 51.50. And once we got up there, this market rolled right on over and revisited near the lows. And we thought for a minute we were going to go trend and have an outside day down. And if we got that today, but not as early as I was thinking. I was thinking we were going to go trend down. At the time, it looked like we had a highest accepted price. It was just a lot of mixed market generated information. So after taking out the day's high, right, the previous day's high, getting that 10 wide point of control, getting up to that afternoon rally high, and then rejecting off of it, we had a buy tail and a sell tail, and we were trying to figure out which way this market wanted to go. We didn't know if it was going to go down or if it was going to go up. Well, it eventually started to just slowly grind its way up, where I eventually got short again against that afternoon rally high around the 50-51 level. I came in a little bit. I could have gotten out of the trade for a pretty decent profit. It came back up, and I pretty much stopped out of it break even and made just like a little bit of money on it, not a lot. I think it was like 1 or 2 points, not a whole lot. And then I was like, you know what? If this market does push up, I want to get short around the 58 to 60 level, and then use B's high as my out right here at 66. So as this market began to grind up later in the day, A, B, C, D, and E, F, and G, I was looking to get short. We actually were trend at the time. We actually had single prints at the time above the day's high right here, right? So from 51 to 54, we had single prints, and I wasn't expecting this market to hold trend or go trend at all. But once we started to push up through 58, I was adding to my short that I initially had on at around 56. I added 58. And then I was thinking, all right, this market looks like it wants to continue to grind up higher towards 66. And I was kind of talking to myself, do I really want to take 10 points worth of heat to the upside and ruin everything that I had made this week, right? So I got the P&L stuck in my head of what, the loss could potentially be, instead of looking at what could have happened. Which was pull back and fill the single prints, which was was my ultimate target of 51. I was looking for this market to pull back into 51. So I pulled down my stop point from 66.50. I moved it from 66.50, which was 2 ticks above B's high. I moved it from 66.50 down to 60.50. Okay, Today's high was 60.75. I got stopped out by one tick, all because I thought about P&L instead of sticking to the trade and the idea. The idea was to push up into the upper distribution from that day, right here, right? From the upper distribution, and see if we found acceptance or rejection of this area, right? So I was looking for us to reject from this area. That was initially the plan. But then I began to think about the potential loss point if we got up to my original stop point of 66.50. And I even had the idea, if we continue to push up, I was going to add to the position, right? Until I got stopped out, because that was my ultimate target of, all right, I've had enough pain, A, and B, the trade is completely wrong at that point, right? Ultimately, that was one hell of a rejection point, as from that point forward, from 60.75, where I got stopped out by one tick, we continued to fill that set of single prints, hit my price target of 51, where I would have gotten out of the trade from that short from 58, right? And then from there on out, we continued to grind lower and just got an absolute disastrous liquidation break below the open. We continued, we just liquidated straight to the day's low, pushed lower, and then took out the previous day's low. So not only did we take out the previous day's high, we took out the previous day's low, all because we pushed up into this upper distribution and got rejected out of it. All right. Pushed up there, rejected heavily, outside day down is what we go out with, and then even dipped our toe into that area where the gap was. So with all that being said, if you got a trade plan, stick to it. This I'm speaking to myself here mostly, but for those of you that watch this video and that actually trade, if you have a trade plan, stick to it. All right, don't think about the P&L. Don't think, if the trade plan is happening in front of you and is going, it might be going against you a little bit, but until you hit your original stop point, don't, you know what I mean? Like, I was taking all this other context into place here. I was thinking about the single prints that we had, and I was like, oh God, we're going to have another set of single prints. This is going to grind up, and I'm eventually going to get stopped out. So if I'm going to get stopped out, let's just go ahead and take the loss here, right? Move it down. If I get hit earlier, it's better than getting hit later and losing, $1,000 instead of $200, right? So I was thinking losing $200 across 4 accounts, totaling in about $800, $900 loss is actually what I ended up taking. Would have been better than a $4,000 loss, which I would have taken at the 66 level if we gotten above that, right? So I was thinking about that instead of my trade plan is working out. I should have waited until the next time frame, seen that we couldn't take out that high, and then reap the benefits of my trade plan working out. And instead, I ended up battling back from a $950 loss to only about a $270 loss. After we got down near the lows, I began to scalp shorts on every push-up. So every push-up that we had against the single prints, I was taking shorts against them, and eventually battled my way back from a $900 loss to only a $270 loss across the account. So not completely disastrous, but I just got to stick to the plan. Just got to stick to the plan. So let's quickly try to mark our destinations for you guys, and then look at the daily and the weekly time frame. So here's our high of day, 60.75, where I got stopped out at. I'm so upset at myself because that's just one of those things that kind of sticks with you. Granted, I fought my way back, and was able to dwindle the loss down, but you definitely don't want to. You hate to see it, At least I didn't I didn't get hurt on the pullback here by buying. I just kind of set out of the market until something told me to get involved. All right. Then we have single prints that fill here. We have single prints that fill. Single prints that start. 25. And you got to have these destinations marked on your screen here, because if you don't, then you're going to miss opportunities like we had today. If you didn't know about those single prints and you didn't know where that upper distribution was, you missed out on the opportunity to get a good short position in, especially after we took out this time frame's low here at 54.25. You know, that was the better play. I was kind of front running and trying to get the high of day instead of taking the better trade with more confirmation, which is something I'm still trying to work on. All right, we have another set that's fill right here at 510. So I'm gonna print fill. $5.10. This one start at 0850. Boom, boom. Overall, I had a great week. Honestly, it was a very good week as far as the trading week goes. Besides today, I mean, I had 2 losing days, and then I had 3 winning days. So cannot be upset at myself. I ended up netting on the week pretty good, so can't be upset. The account continues to grow, which is what we like to see. Low of day here, 93.75. And we do have a price probe. Let me just adjust this here. 93.75 is now our low of day and where the gap starts. And then we have a price probe of 97.75. It's not a very large probe, but we did probe below L's low here. Even though we closed back inside of it, sellers want to see us open below 97.75 come Monday. If we don't, then this market will grind back up towards the 4,500 level or the 45.10 level, where that first set of single prints will fill. So there you have it. You want to open below 97.75 and take out 93.75, which is our daily balance low now, as our balance is from 45.70.25 to 44.93.75. If we take out today's low come Monday, we will go back to resuming one time framing down on our daily time frame, and I'll show you guys that here in just a second. But if we open above that 44.97.75 level, you'll look to rotate up to 45.10. If we get that, then you'll look to rotate up to 45.18.75, and then from there you have nothing but a vacuum until 45.60.75. I don't know why it says 86. This needs to be 75. All right, now let's quickly go over our weekly and our daily chart. So let's look at our weekly. So our weekly has come back into a balance. Okay, weekly has come back into a balance. We're going to call it a 3-week balance initially, but you can see how we're back testing that previous balance area that I was talking about, that I wanted to see us kind of back test that 44.98 area, see if we fill the gap and then bounce out of it. That would be a really good resumption of the the move that we've been having here recently. So now our balance high is 33.50. We'll rename this balance high, make it 33.50, which is last week's high, and then this week's low is 93.75, which will now be our balance low of 93.75. So there's our balance area. There's our little consolidation area. So look to trade in between 46.33.50 and 44.93.75. A very large balance. Very large balance. If we take out this week's low, come next week, come Monday, Tuesday, whatever time next week, if we take out this low here, the weekly will resume to or the weekly will go from balance to one time framing down. I would have included this low here at 44.24 as all of the balance, but I want to give sellers their due here. If we take that out, then that will be our target, and the weekly will be one time framing down. Now let's look at our daily. Our daily balance is much different now. You can see we have rejected and closed below the 20-day moving average 2 days in a row now. We have two gaps, one above, one below us. Our balance low is now today's low of 93.75. So we'll go from that 44.93.75. I said this video was going to be quick, but it's really not. Balance low, balance high is now 45.70.75. 5.70.75. So there's our balance area. Basically, our balance is in between gaps, right? So if we can't take out today's low at 93.75 and fill the gap and resume pushing lower, then this market will, I would suspect, consolidate and chop between the 44.93 area to the 45.70 area. Once again, a relatively large balance area. If we do fill the gap and begin to one time frame down again, your next destination, as far as indice wise, would be the 50-day moving average here at 44.44. So with all that being said, ladies and gentlemen, I hope you all have a wonderful weekend. We'll catch you next week. Have a great day. See ya.